Welcome, everybody. Thank you for joining us today. We have a panel about Bitcoin ETFs and what's going to happen next, what has happened so far, and what we can expect in the future. Joining me today, I have three wonderful panelists. First of all, Gloria. Gloria has a TradFi background, so she has a background in sales. I think her last position was fixed income sales, but now she's self-employed, working pretty much full-time in the digital assets and crypto space. And she's also the advisor of a number of crypto startups, so really kind of in the grassroots of crypto. Then joining us also is Justus. Justus is manager for blockchain at Sanders. Sanders, for those who don't know, is a leading global treasury and risk consulting firm. And Justus has a Master of Science from Frankfurt School, which is also my alma mater. So that was nice to see. Thank you for being here, Justus. And last but not least, Radoslav is joining us as sales director from Kaiko. Kaiko is a leading crypto market data provider with a very institutional focus. And Radoslav also has a career in sales. So he has had stations at Barclays, Credit Suisse, and PwC also. So like I said, we're talking about the Bitcoin ETFs today that launched in the beginning of this year. So we've had quite some time now to analyze the impact that they had on the market. And that's pretty much the first thing I'd want to talk about with you guys is what cultural impact did the ETFs have on the market? And especially in Europe and even more particularly in Germany, I'm wondering how these ETFs changed the perception of crypto publicly, but also for financial institutions, because reputational risk is a big topic here, at least it has been for the last couple of years when dealing with crypto. So I was wondering if maybe you can share some insights in what you've seen. Gloria, feel free to go first.
Yeah, Maximilian, thanks for having me. From my point of view, the approval by the SEC of the 11 spot ETFs in the US, this marked really a very, very important milestone in institutional adoption in general, because we all know that the media perception, above all here in Europe, was very, very negative so far. And we all remember that at the same time last year, we all talked about crypto winter and about really a very slow adoption in general of blockchain technology from the institutional side. And as I said, the approval by the SEC of those 11 spot ETFs, this turned the whole perception into a more positive light. Why? Because we all know when large asset managers like BlackRock, Fidelity, and so on decide to step into a new product, this means that they have put a lot of work into research. And whenever they decide to really board on those products, this opens the market for large institutions. So we also a really very dynamic process within the last months in media perceptions, a lot of media interviews came to the market. And I think above all, the institutional sides now starts really focusing on those products and start researching about the implication of the whole financial market here. So I think it was a very important thing and a good thing for the whole Bitcoin and cryptocurrency space in general.
Yeah, I would agree. I think it's maybe not only the SEC approval, but like you said, more so the players that are working on it or that kind of put their foot forward. I don't know, Justus, you must be in touch with a lot of corporates, a lot of industry players. Have you seen a shift in their perception?
Yeah, first of all, I agree with Gloria. There definitely is a perception change, and there's, well, some legitimacy attributed to Bitcoin due to the fact that the SEC approved the ETFs, as well as big names as BlackRock being involved. Yeah, also attach a sort of too big to fail mentality to it. Then again, you got to keep in mind those companies are in the business of making money, and investor protection is not necessarily their highest priority. So keep that in mind. But if you look on the corporate side of things, in the treasury function, as of now, there is no huge interest in the ETFs. Generally, we see, well, more shyness towards cryptocurrencies on the books, and most companies opt for an instant swap. So they try to not even have crypto hit the books for a single minute.
Okay, that's quite interesting. We can go into that a little bit deeper in a second. Radoslav, what's your opinion here?
So I am a bit late to the whole crypto party. A year ago, I was still working for an investment bank, and I think what, in my opinion, changed the perception of crypto is that it's just not going away. If you think about it, only a year and a half, or maybe now a bit longer, FTX collapsed. You had Terra going under. People were saying, "Oh, it's all a scam. NFTs are worthless, etc." But it just didn't go away. It found the bottom, and I think then with basically the SEC not being able to deny the ETF any longer, I think people started recognizing it as an actual asset class. Now, with every asset class, people try to kind of invest in it directly, indirectly, and the ETFs are just a nice vehicle for the retail. For retail to get involved, they don't need to do any additional KYC. They can do it via their existing brokers. Now, obviously, we in Europe had this opportunity for several years already, but I think in the US, it was the first, so it was quite a game changer. And then the next step was, the fees got reduced significantly from 2% down to what we have now, 20 basis points. Already something that has been happening in Europe. So Europe is clearly a bit more advanced in that regard. But the fact that crypto is now a bona fide asset class where people want to invest and can invest, that's I think the biggest achievements kind of over the last year and a half in crypto.
Yeah, I think a lot of people are probably proud of that as well. It's a classic story of perseverance, so to say, through a number of hard years. And the point you make about being an asset class, I think, is also very valid. Is that because it's available as an ETF, people really understand it as an asset class now. They see that it's kind of in the same universe as the other things they invest in, and yeah.
I mean, but I also kind of agree with Justus, right? For us to do the next step to actually kind of get banks or get someone else to invest it, we need to have the appropriate framework. Being it, like if a bank even holds crypto now, they're gonna take a full RWA risk, not real world assets, risk weighted asset hit. You can't trade on that. It's just doesn't make any sense, right? When they have to put provision for it with 100%. Now those are the next steps we need as an asset class to get the regulation in place so this actually becomes a fully tradable, even more liquid asset.
So do you guys think there will be more, well, maybe not as extreme as them, but more micro strategies in the world, basically, maybe even in Europe? So companies that are really betting big on crypto, even though it's not part of their core business model?
I
don't really think so. I mean, MicroStrategy was more a makeshift solution, MacGyver style. So I don't see why anyone would step in their footsteps, really.
I mean, from a company's point of view, it also implies a lot of risk if you start owning cryptocurrencies or Bitcoin on your balance sheet, because whenever you're listed on a stock exchange, this is what we saw with Tesla at some time ago, then for sure people will have a look how the underlying assets, so let's name it the Bitcoin, how the price increases or decreases. And this then has a direct impact on your stock price. and market values. So it also implies a high risk for those companies. And I know that from the players in the markets, so the brokers, the Bitcoin brokers, they try to onboard companies and to convince them to own a lot of Bitcoin. But I'm not sure if this will really be a very successful game, because here I'm really with Justus. I think it's not really working at that moment, at that point in time. But maybe it will change over time. I don't know.
Yeah, so to sum that part up, I think it sounds to me like, yes, perception is switching towards a more positive note, even if it's just from a business case perspective and people understanding that there's business to be made here. But we're still quite far away from really every, let's say, every treasury, every company, etc., seeing it as part of a balance sheet, as part of their portfolio, so to say, where they have all the other asset classes as well.
I mean, in my opinion, there's a clear use case if you wanna, if you're located in jurisdictions which don't have the best payment networks, and if you wanna centralize your flows. Obviously, crypto is perfect for that because the transfer is instantly. You can go cross-border without any limits, which you cannot do with the normal payment network that efficiently. Clearly, in Europe you can. In the US, it's also fine. But if you go to Africa or some of the other more, let's say, less developed regions in terms of payments, there crypto has a real use case. So which then could further kind of benefit for the adoption of it as an asset class. But as both Gloria and Justus have said, it's going to be tough to see companies investing for the investment purpose, like just have it as a speculative investment.
I mean, coming back to the ETFs, I think what we can also mention here is that an ETF, the product itself, it offers a very convenient and also regulated way to gain exposure in Bitcoin. Because let's name it, I mean, investing directly in Bitcoin, and perhaps also if you think about self-custody, it's really, really complicated, and it's not that easy. And whenever you use a full service provider, so who offers also the custody, then you have to think about, again, the risk associated to this custody. And so an ETF is a very, very simple product, which is known to every capital market participant and also to all retail investors. And this makes it so convenient and so easy to access for a lot of people that this is, I think, one of the most selling points here. And this also explains the success we saw during the last weeks or month, even since the approval.
Yeah, and going into that directly, the success we saw, the rising adoption, I think a good measure of, well, if not adoption, at least interest is volumes, both on-chain, but also the volumes in the ETFs, and then the net flows, so inflows versus outflows resulting out of that. And I think we saw, at least speaking for the Fs, a very, very strong start. I think one of the probably most successful launches in history, measured from just inflows and volume in the first months. And we've kind of tapered off a little bit since then, but I'd want to, first of all, I want to ask you, Radoslav, if your on-chain metrics are kind of confirming that there's more stuff going on-chain as well.
Absolutely. I mean, we have a product called Data Plus, which is publicly accessible. It's free, and people can just look at the Bitcoin volumes in terms of over the last year, and you really see the market kind of going from 5 to 10 billion a day trading to now 20, to even think on the biggest trading day that we had this year was almost 50 billion of trading. And it's consistently higher. And this is not just price inflation. Obviously, price inflation helps in that, but the trade count went up. So the actual amount of trades, and you can really see it kind of rising into the ETF approval, with actually the busiest day until February, March being actually the day of the ETF approval, because you saw all these switches from Galaxy, from the existing funds and some of the newer funds. But no, this is not a fluke. The inflows might have slowed down, yes, but the absolute trade volumes have certainly not. In fact, they've significantly increased since January.
Perhaps in addition to that, we had two very, very interesting events at the first quarter of this year. So one was the approval, which led to the fact that we saw a lot of inflow, so a lot of interest in Bitcoin itself. But then, in addition to that, we had the halving just last week. So this combination of those two events, I think, may be a good explanation why we have such a rise in trading volumes here.
But Gloria, where's my Lambo? Actually, that's a question I get a lot the past few days is, hey, the halving happened. What's going on with the price? So maybe I can propose another quick question in the round. What's your stance on whether or not the ETF approval as well as the halving was already priced in? Because it was two events.
I mean, frankly, what wasn't the halving known already when it's gonna occur? I think the biggest price swing we saw on ETF actually coming to fruition. I mean, we came out of crypto winter last July when the first hint was, these ETFs might actually get approved, and then the more news came out that it's going to be approved. So the biggest catalyst this year was clearly ETF approval. The halving was telegraphed. Now, the effects that the halving might have in combination with further inflows into the asset class remain to be seen, but it's not like one single event that immediately changes the price of an asset. Plus, I mean, addition to that, if you look at the performance of S&P and Nasdaq over the last couple of weeks, it's not like they've been going from strength to strength.
Good way to put it.
I totally agree, but I think this combination will not happen again. That was but I totally agree. I mean, the halving maybe from the media point of view, it's a bit the implications may be limited to the media's perception here. That's for sure. Yeah,
which I think goes back into public perception and everything that has happened since ETF flows. And I think after a couple of years of silence on the media front, like you said, Gloria, we're really back making headlines, so to say. I think the halving was a big topic for every major news outlet, at least here in Germany. The ETF approvals were too. And actually, I want to take a question from the chat quickly on that, because we were kind of going about institutional adoption. And Sabrina asked, how does the fact that the US pension funds have 1 to 3% Bitcoin in their mix influence the institutional finance institutes? Now, I don't know if US pension funds are investing in Bitcoin. I don't have it confirmed. We'll just take it as she said. I didn't research this, but I do know that there are a number of other ETFs, like I think from Fidelity, I think that one made headlines, right? There's some ETFs that have a global approach that are now starting to mix in Bitcoin into their portfolio. So happy to take all of your thoughts on that.
In my opinion, clearly that would drive further inflows into the asset class. How it's actually gonna bring in, so I think people need to understand kind of that banking or investment banks, if we're just gonna go now to institutional finance, investment banks have clearly changed since 2008 because of the whole risk-weighted asset thing. And as long as Bitcoin is not defined, it's going to be very tough for any investment bank to run a Bitcoin trading desk, because it's pure intermediation. They cannot do prop trading. It's not allowed since the Walker rule. So that's not going to happen. That does not mean that other market makers, which we have already in the crypto space, or exchanges, are not facilitating these ETF flows, which they are. So these are just different institutions, but we should not wait for a headline, Goldman Sachs starting a Bitcoin trading desk, because that is highly unlikely to happen until we have new Basel rules, which for some reason will accept Bitcoin or crypto as an asset class. And so I don't see that. Nevertheless, whoever, Sabrina, in this case, kind of is absolutely right. The pension funds are taking that in, not every single one, but slowly and surely. And that's the future of the asset class.
What about European pension funds? How are they doing? Swiss ones, for example, also.
Way more conservative than the American ones. I can tell you that. Biggest pension funds in Europe, the Danish, the Dutch. The Dutch have, until I think a year or two ago, published papers on how awful crypto is. Like literally written white papers how awful crypto is. But I think all of them at least have someone who is in the digital asset space now.
Yeah. And going on that, we have another question from the chat and from Christian, and he asks, how does the Bitcoin ETF align with the investment strategies of European funds, particular in terms of diversification and hedging against traditional market volatility? And I'd just like to add one thing here. European funds, to my knowledge, have been able to invest into cryptocurrencies through other products for since before the ETF was approved. And I think in Germany in particular, you can have, I think it's 20% or so in some of these funds. So it's not like the ETF is now the first chance for them to do anything with crypto. But
I mean, one important point here to add is that no European, or in other words, the ETFs approved in the US are not allowed or open to European investors. So what we can buy here are ETCs, so exchange traded commodities, or ETNs. And the difference here lies in the risk associated to those products. So this is just on the general side. Perhaps, in terms of how strong it aligns to investment strategies, perhaps somebody else wants to answer here, because I'm not an expert here.
I think, yeah, go ahead, Justus.
I can have a go. I wouldn't say it has a lot of influence right now. I mean, as mentioned before, there was options to invest into Bitcoin before. It's not exactly a new thing. It might be a little more hassle-free because just the way into it is a bit more comfortable. But I mean, from an investment perspective, nothing has really changed with the ETF or any funds.
Also, it remains to be seen how because I think Christian is also mentioning kind of the hedging aspect against traditional market volatility. Well, I mean, crypto is more volatile than most traditional asset classes, and has been, very much in line also with the rates. So how much hedging can be done with crypto versus traditional assets, I'm not sure. Nevertheless, that's not even the point. You sometimes, because the asset class is more dynamic and has a structural value inherited by being finite versus money being infinite. So it's just a different type of investment, but not necessarily a hedge.
Yeah, I think I would agree with that. And I mean, something that's ringing through here, I think, with the previous question about the pension funds, now funds in general, also corporate treasuries, etc. I mean, there are a lot of studies that show that like 1 to 4% of crypto allocation in a portfolio can be quite beneficial in the long term, as long as you rebalance, etc. And I mean, this is data, this is quite known, and nonetheless, we're not really there yet. So I guess there's still some doubt in the decision maker side, or maybe it's just a regulatory reason, like you said, Radoslav. Maybe it's just because of the way it's classified right now. Maybe it's for whatever reason. Yeah, we're not quite there yet as that goes. Or I don't know, Justus, is that a topic you hear sometimes? This kind of, in a general portfolio perspective, it could make sense, or is it really just a upfront no when it comes to holding crypto for longer time periods?
Well, I haven't really run into anyone that was interested in holding crypto for any longer than they needed to. And that is speaking from a financial institutions and corporate perspective. It might be different for funds and wealth managers, or I don't know, family offices might be interested in it. But on a larger scale, I haven't heard or met anyone that was interested in holding crypto. And I would say that's mainly due to the fact that it's just very uncertain for now. Mika is not fully in effect, and I think it's just the uncertainty surrounded that steers people away from it for now.
That makes sense. And going back to the topic of our panel, right? We want to look a little bit into the future and what's going to happen next. And I'd love to get your opinions on, well, a potential Ethereum ETF in the States, and also your view on, well, why those news are so big when in comparison in Europe. Yes, they're not ETFs, but we have a lot of products. We have Ethereum products. We even have ETNs in Europe that let you invest in Ethereum and pass the staking rewards onto you as the investor. So they're like even more complex, even more advanced. So why is everybody looking at an ETH ETF out of the US? And will we even get one? I think that's the bigger question as well.
I mean, the US dominates the financial services worldwide. Almost all Americans have a 401k, so they are familiar with investing in funds, and they are usually free to choose in what they want to invest as long as there is an offering. With BlackRock, Fidelity, and others who are obviously kind of providing funds already to other 401ks, having now their own funds, they can put it on offer, and these 401ks are driving quite a bit of the market. 401ks basically are just the Privatvorsorge, the private pension funds of most Americans, and they invest on a monthly basis. So that's kind of why a new product or a new ETF in the US moves the market more than a new product in Europe, because the investment is not just big. Yeah. Sorry.
Excuse me. And I also think that people expect a kind of blueprint version of the successful story of the Bitcoin ETF, because what we saw was really a kind of bull run into Bitcoin. And with that, we saw a rise of all cryptocurrencies here. And I think so people perhaps just expect a kind of similar success story here. Whereas I think, still, in terms of market capitalization, we all know that Bitcoin accounts for more than 50% here of the total market cap of cryptocurrencies. So if we now think about an Ethereum ETF, I think this will not necessarily lead to the same successful story, because the blockchain just has a completely different use case. We're talking about smart contracts and not about this really store of value Bitcoin. And so I think we all have to be a little bit cautious here in terms of lead to a similar successful story in terms of adoption and interest.
I actually kind of disagree on that, because the difference if you look at Bitcoin and Ethereum, then you could argue there's actual productivity behind Ethereum while it's not with Bitcoin. So if you look at it from a more stock market perspective, then Ethereum might actually be more interesting to people to invest into. On another note, the SEC previously had a very negative stance towards proof of stake blockchains and their tokens being potentially passing the Howey test and being classified as a security. So that might be a problem. However, Hong Kong, I believe, just approved their Ethereum ETF. So yeah, we got to see how the US acts on that. But I wouldn't be too surprised if it doesn't happen too soon. However, they did rule in favor of Ripple, so who knows? It's really hard to tell what will happen with the Ethereum ETF.
Tracking the news out of the US lawsuits and regulatory bodies regarding cryptos is almost a full-time job anyways, because there's so many cases going on, so many small wins, small losses for the crypto community. So I think that could be a whole panel by itself.
Maybe
I
just
do want.
a little addition. What I would be more interested in is an ETF tracking several, so having an index of, say, the top 10 cryptocurrencies, for example. I think that would be a interesting move for the whole market.
Also something we have in Europe, right? And maybe the same arguments count here, that you know, if you have more cryptocurrencies in there, you run more and more risk of the SEC really classifying one of those as a security because of the way they're set up, right? You're all
I
laughing
mean,
about it.
honestly, a top 10 index or top 100 index sounds great, yeah. But I mean, we're going one by one, right? And then after 10 are approved, you can just bundle them together and make it a top 10, because then it's obviously fine. But it's really, because they are considered asset by asset, it's not the same like building an index for shares. It just isn't the same. So yeah, that's gonna take a while to be. I mean, we have our own index business, and then we have, you know, your top 10 and then selected indices already available. But in order for that to kind of get approved in the US, that's gonna be quite some time, I fear.
I mean, what the whole discussion shows here is that there's still a lot of regulatory uncertainty in the market. And I think this is the biggest game stopper also for institutions if they think about starting cryptocurrencies trading. So as you said, it will not happen too soon that, let's say, one of the big players will officially say that they're going to start, let's say, crypto trading by themselves. And also in terms of, so coming back to the questions here in the chat room, if we will see a lot of funds investing into those products, I think the regulatory uncertainty is still so strong in this space that there are a lot of risk associated to that fact, and this will remain a lot of participants from getting active too soon. And above all, as you said, Justus, in terms of how the SECs regards all altcoins, are they more on the security side or not? And so here we have to wait and see. And perhaps this is also the reason why it will take some time until the Ethereum ETF will be approved. Yeah, I totally agree.
And you know, on the index topic, yes, there are some of those products available in Europe right now, but even those took some time, and even those had there were some, let's say, difficulties in setting up those projects and setting up those products, right? Because you have counterparties there in the sense of the market makers you're working with, the authorized participants, etc., that they need to be able to deal with all this as well. And then going in deeper into regulatory uncertainty, everybody that's been on one of these panels in the past has heard that word a lot of times in the past, I think, and we are moving ahead with Europe. We are getting the MiCA regulation right, so maybe we can say we're one step ahead, but why would you say there's still so much uncertainty in Europe, even though we're clearly getting a big kind of piece of the puzzle? What's still missing?
I mean, I think Europe is doing a lot of things very, very well. MiCA is great, like just in terms of, you know, consumer protection, etc. It's absolutely great, and I think kind of just the first step into bringing crypto to a wider audience. But I think everybody will agree, the big prize here is really the blockchain technology and getting real world assets onto the blockchain. The amount of efficiency gains that can be harvested through that is incredible. Even the biggest naysayers of crypto, I mean, people like, you know, Jamie Dimon, who's not a big fan, but even they're operating their repo business on chain. So long story short, the next steps need to be kind of to get real world assets on chain.
You mentioned Jamie Dimon, but I think Larry Fink has also been having a field day with this topic ever since the ETFs got approved, talking about tokenization, etc.
It's the big thing. Just the amount of efficiency gains that you can get from your back office are incredible.
So would you say that maybe, and I guess Gloria, Justus, you can answer this too. While the ETFs were kind of the Kickstarter to the market that we're in right now for crypto, right in the beginning of the year, maybe we're transitioning away from that becoming less important, the Ethereum ETF being less of a big event, and more so we're transitioning towards this topic of real world assets becoming more and more relevant.
I would agree in the sense of real world assets is going to be the big next topic probably. But for me, especially factoring in Mika, it's all about the payment lag, right? So as long as we don't have the payment lag figured out, as long as we don't have a regulated CBDC or any comparable coin, then I don't really see too much adoption happening, because it's nice that we have the whole framework, we can do a lot, but in the end, you still need the payment lag, and that's what we're missing right now.
Even if we have regulated e-money tokens, after Mika, you're still saying CBDCs is the holy grail.
Well, I mean, that's what I was saying with CBDCs or comparable, right? So, I mean, it's
Okay.
seeing what we will see e-money token wise. I mean, most banks right now are active. A few like Citi, JP, they have their own coin, but it's still gatekept by, you need to have both parties banking with that bank. So, yeah, I mean, in the end, it's the same in green, right? So we need a open system that actually is able to facilitate the payment lag.
Gloria, your thoughts?
Yeah, I have different thoughts here. So first of all, I wanted to come back to your question before, and it is really interesting to see. We have, I would say, the strongest regulation here in Germany and Europe in general for blockchain technology, for cryptocurrencies, and also other use cases. And that is really interesting to see that, however, we are still waiting for the next big step in terms of adoption from the institutional side. So apparently there's a bias still we have to discuss here. And where does it come from? Well, on the one hand side, I think there is still a very, very high reputational risk associated to everything that belongs to blockchain technology. And why is that? Because still, that is my personal opinion, to understand really how blockchain technology works and what's the difference between Bitcoin, Ethereum, altcoins, stablecoin, the European, the digital euro, etc., you have to dive deep into the topic. We all know it from our own journey. And I think in terms of education, market participants are still lagging behind, because otherwise I cannot understand how, on the one hand, we have such a strong regulation on our side, and still there's such a strong hesitation towards adoption. And then coming back to the last point, if real world, so tokenization of real world assets will be the next big thing, I totally agree to Justus. I don't think so. I think this will also remain a niche product, something that is nice to have, that is very interesting to show, but I don't think that this will be the next big thing. What is more interesting, I think, for financial institutions is really to have tokenized funds, securities. So
that will run. But just to be clear, I run that under RWAs. Hence the back office thing, right?
Okay. Then we agree.
I was sure about that.
Okay, then we all agree here. Cool.
Nice, very good. Yeah, I think it's a very interesting point that you made, where you say, well, we are taking steps forward in regulation, and there's still this reluctance, right? And either it's reputational risk, maybe it's the decision makers, maybe it all comes back to our favorite topic, education. I don't know.
I mean, but it's also you have a lot of people kind of who have vested interests in the current system, right? I mean, if you, and with all due respect, if you're a clearinghouse and you make billions out of clearing bonds, CDS contracts, etc., you know, and your position basically becomes irrelevant when everything's on chain, virtually irrelevant, would you really kind of push this whole on-chain thing forward, or maybe say, maybe, you know, we need to talk a bit more about that. Let's give another year or two.
Sure. I mean, I think as always, where there's a long-standing system, people that have worked in that system for a long time, and when there's a lot of change, there's
also worth noting, DTCC has made their first acquisition in 20 years recently. And it was a company that does on-chain technology. In DTCC, for everyone who doesn't know, they're doing the share clearing in the US. So I think everybody knows where this is going. So the fact that RWAs in shares, bonds, financial contracts are going to get on chain is an undisputed fact.
Yeah, I think it's quite well known that there's a number of projects in Germany as well from very, very important market infrastructure players that are trying to figure out how to deal with electronic securities in general, whether that's on the blockchain or not, right? There's a couple of different options here. Yeah. Wonderful. Well, thank you so much. I think we have 5 minutes to go. To be honest, I've been answered for every question I asked. You guys had a good answer for it. I do want to give the opportunity to the chat or whoever remains to ask another question before we head out. Yeah, any closing thoughts otherwise from Gloria, from Radoslav, or from
I
Justus?
can also
Anything you want to put up?
propose another topic, maybe.
Yeah, go for it.
I've had a few weeks back at an event, and the idea was, if we see the halving now and there's going to be a supply squeeze, then at some point we might see a scenario where there's no Bitcoin available over the counter. And the ETF is still open. What's going to happen? Are we going to see a synthetic scenario? Is the market just going to correct itself because the price is going to shoot up and at some point someone will sell? Yeah, I don't know. Maybe your thoughts. Interesting thought experiment.
It's the Bitcoin bull's favorite thought experiment.
Okay, let's buy. No financial advice here. Yeah, but it's definitely a very interesting question, and I think yeah, there's no true answer to this. I mean, I'm coming from the capital market side, and for me, it would be the logical consequence that prices then would rise incredibly, and it would lead to really a price, an extreme price increase, but. I mean, with Bitcoin, we see now a totally new kind of asset class because it is the supply is limited at the end, and so will be interesting to see, as you said, Maximilian, the best scenario for all Bitcoin hodler. And yeah, I have no clear answer here, but it's interesting to think about it. Yeah.
I mean, to keep the bullish view, gold has a 15 trillion market cap. Bitcoin has a 1.6 trillion market cap. If it goes like that, we see 600K for a Bitcoin.
I mean, gold does have a couple years of a head start on us.
I mean, that's just to kind of humor the bullish view. But yeah, I mean, that's how the market works, right? If you run out of Bitcoin, you pay until someone sells. See also GameStop a couple years back.
Yeah, classic squeeze. I mean, from my point of view, I think not to crash the party. I do think that we're in a very bullish time, but you know, it is also naive to expect that nobody will sell. People will definitely start selling at certain prices, right? At some point, we're talking about life-changing sums for a lot of people also. So I think that if we run into this kind of supply crunch, let's say this happens very quickly, I don't know, just like the GameStop thing, I don't think it's going to be, well, it can't be infinite, right? There's going to be maybe a spike, appreciation, maybe we'll stay on a higher level, but it's all going to kind of balance out, right? And at the end, that's what markets are great at, is finding an equilibrium price for something.
People used to buy houses with tulips as well, so you can see people.
I didn't want to bring the tulips into this, but now you're the one.
No, I'm just saying, like, market correction could happen, absolutely, and especially kind of if euphoria sets in, but eventually, kind of as you said, a reasonable level will prevail.
Perhaps this is the perfect closing remark here, that this fact we just talked about shows how complex and how important the ETF approval early this year is to the whole space, and how complex the whole story is about. And perhaps that's a perfect closing remark, because it will have further implications to the market, to prices, to the infrastructure providers. And we are looking for a bright future here in terms of adoption. And I'm pretty optimistic that, let's say, in a few weeks or a month's time, we will reunite here together and talk about what will happen next. So yeah,
way to hit it on the nose. I think great closing remark. We're lucky this is being recorded, so we can come back to it in 5 years and see what the hell we were going on about. So thank you everybody for joining. Thanks to all who asked questions in the chat. And wishing you a great rest of the week. Bye bye.
Yeah, thank you so much. Bye bye.